Vikram will start.
Yes, please.
Hi. Good evening to all our Indian participants. Good morning, good afternoon to all our NRI participants who are joining from different time zone across the world. Thank you all for joining on a Sunday. So today I'm very happy to introduce our speaker, Mr. Vikram Kasat. He heads our equity division. He has more than 17 years of experience in equity market, and he advises HNI, ultra HNI investor across India and overseas. Today, he'll be sharing his perspective on equity market, and he also will be talking on Falcon advisory portfolio, which he's managing. So during the presentation, if you have any question, please post it on the chat box. We'll take it after the discussion. So over to you, Vikram.
Good evening, everyone. So I'm Vikram Kasat over here. It's been like 12.
Vikram, if you can put on your camera.
Yeah,
Thanks.
it's almost been like 12, 13 years over here with Prabhudas Liladhar. Thanks, Pankaj, for the kind introduction. The session will start basically with what exactly the markets have been going through, point number one, and what we look forward in this current juncture. And of course, our PL Falcon advisory portfolio on the later part. So I've not made any presentation on the basically the markets as of now, but I will just quickly go through what exactly has happened and what are the points which are being important going forward. So basically, India has underperformed Asia by almost 30% in the past 12 months. India was expensive and there were concerns around elevated multiples, which had kept investors on the sidelines. Almost it's been 400 days with zero returns as of now in the markets. India is now the biggest underweight because of two, three things. First, there were elevated multiples. Second, the money was going into the AI rally across the globe. And with the reference of AI rally, we didn't got any funds because we don't have any major exposure to the AI stocks or AI companies as of now. So the valuations were much towards the underperformance, and there were many headwinds as they were a year ago kind of. But right now, if we see, as I said, India has outperformed Asia by 30% in past 12 months. It has been one kind of a history kind of like we have been into such an underperformance. So we feel that we can come after the recent underperformance, both against India's own history, but also relative to the other major Asian peers. In fact, we think India offers value versus the Chinese equities also as of now. So Indian equities, which have witnessed very dramatic amount of foreign selling also in the last 1 year. To tell you roughly the ballpark numbers, FIS took out somewhere around USD 30 billion in the 12 months till September as of now. So the foreign funds have reduced their exposure to India quite considerably. And it has been noticeable that it has been went to the AI related stocks across the globe. India is likely to be an outsized beneficiary of any additional money coming into the EM markets as of now. So first, basically, we'll start with what exactly went wrong and why this money, which was supposed to get parked in India, went outside. The major reason was a year before there were elections in India and many of the capex was being stopped because of the election part in Maharashtra. There was one basic concern which everyone thought of, the Ladki Behan thing which happened in Maharashtra, and money was been handed over to the public for the votes. That was the one major thing or major obstacles in the mind of the investors and the FIs, that lot of money has been gone into the voting spree. Also, for the almost 2 quarters, there was a dull or nil action from the government. There were no capex announced from government also and from the major industries also. So roughly, you see the earnings of the companies were almost downgraded by each and every broker across. So there was an underperformance because of the earnings, point number one. Second, the world shift was there. Trump announced back to back, which was once upon a time the Trump was actionable only towards China. It came back upon us very badly. The attack, which was first on China, it came back to us not only for the first time, but for the 2 times by saying that we have been buying oil from Russia and we got a penalty for the same. So, as of now, after such an underperformance, we feel that we are back to the levels where we can see there is a bottom of the earnings, and we further see the change of the FIS, which should come back anytime soon. So first of all, I will just quickly tell you what exactly the new world disorder which has been happening going through across, because one of the main trigger is tariff deals, which I thumbly say that in next 10 to 20 days the deal would be signed off for sure. We are at the stage where we see that the deal is very near. The reasons behind is the tone of the Trump is again and again saying that we have stopped buying Russian oil. Point number one. There are few companies which openly say in their conference calls, post their results, like Chennai Petro, one such company which openly came and said that we have stopped buying oil from the Russia. So these are the signs when the company starts saying that we have stopped buying oil from Russia, and Trump wanted this to hear, and Trump wanted some news from us that we should stop buying Russian oil. So first of all, to like say about this topic, what exactly happened over there, I would like to quickly go through once again on this topic, and I would like to share some of the details what exactly happened in the markets, in the Indian markets. So it was a new world disorder. Indian stock market has had a relatively tough year with lots of headwinds and unexpected surprises. On the hindsight, India continues to show strong economic growth. The GDP growth for the second quarter was roughly around 7 to 8%. The corporate earnings cycle started to improving from a slow period last year. We still find many companies that can deliver 15 to 20% earnings growth and double revenue over the 5 years. The Modi government is pushing the accelerator this year with a tax reform to lower income tax and a GST reform that will make consumer goods more affordable. Also, the central bank has cut interest by 100 bips already and injected liquidity in the economy. Subdued inflation opens for the further cuts from here on. Well, after hearing all this, the Modi's push, the GST reform, the central bank cut, injected liquidity in the economy, still there was been selling by the FIs. Well, the answer which I said you first, the first was the valuation, then the AI rally. Future gains in the market will have to be led by earnings growth only, not the multiple expansion. Another reason to say that the Trump started the trade war with China in 2018. That was the start of dismantling globalization and 80 years of free trade. A few years later, global companies started to relocate manufacturing from China to India. This trend was called China plus one, if you remember there was a trend going on in India, China plus one. As an example of this, all iPhones for the US market will now be manufactured by Foxconn in India. As late as April this year, Modi and Trump met on a good terms in Washington also. India has lowered import tariff for American autos also. Modi also made a deal to buy more defense equipment from the USA. But now the relationships between USA and India seems very frozen kind of. Because of this, we were hit by 50% for the export to the USA as a punishment for buying oil from Russia. China, where it actually started, on the other hand, was given another 90 days to negotiate a trade deal with Trump. China has got an important negotiating chip, which is called the rare earth metals. India's export to the US is only 2-3% of the GDP, and important sectors like pharma and IT services have been exempt from the tariffs so far. Despite previous disputes, Modi is now opening up to a warmer relationships with China. China recently celebrated its 80-year anniversary of victory over Japan. And at the end of the Second World War, the Modi was one of the guests. India is now opening for more trade with China. India is dependent on raw material and components for several industries as well as access to the rare earth metals. So if you have noticed, Elon Musk wanted to assemble Tesla cars in India. It now seems more likely that India will give permission for the Chinese automakers also, which is BYD, Build Your Dream, to make electric vehicles in India. So the outcome which happened into China, Beijing, which was attended by Xi Jinping, Modi, Putin, and many leaders from the global south, was that there will be a new world order that does not include America and Trump. So what we have seen is in this global new order, the Trump has achieved so far with his trade policy is to unite the world against him. That was the basic thing which we argue for. And that's why we think that the money which is flowing against India would surely come back from other countries and from the Asian peers back to India. And this would be the start of the earning cycle also from here on. And India could be back as one of the top performing markets soon. Also, this festive season, which was really good, and good news has already started to trickle. It was been shown in auto numbers in last 10 days. Government and RBI both have taken enough measures for the consumption growth revival, starting from the budget tax break for lower income tax bracket, RBI lowering interest rate on the lower inflation, and the recent GST rate cut announcement also made things relatively affordable in the current festive season. So we think that Nifty earnings can go up to 1290 to 1300 levels by FY27. And we are applying a 22x earnings multiple to it. We reach a level of 28,600 on the Nifty. We are currently trading at less than 20x FY27 earnings and can provide 11 to 12% returns over next 12 months from here on the Nifty levels. So more importantly, the overall economic growth uptick and positive sentiments could push the broader market in the upward direction gradually. So we feel that this market is for stock pickers. The broad base rally will take some time post, as I said, the many key risk as of now to the bullish outlook is basically two, three things, which is the continued global liquidity flows favoring AI themes, which India is less exposed to, and any diverse adverse direction on US tariffs. On the positive side, a reduction in the US tariff on Indian goods would be significant boost. So as of now, Indian equities offer diversification benefits in the broader emerging market contents. An expected recovery in earnings combined with a stabilizing macro backdrop suggests a favorable risk return profile for incremental exposure to Indian markets as of now. So the long-term investment thesis, if you see, for Indian remains intact, and the key growth drivers, which I would repeat, include rising consumption per capita. We are very young population supporting labor-intensive growth country. The infrastructure improvements facilitating market access and India's growing role as a global supply chain hub, especially IT, pharma, and consumer electronics. This broad-based recovery will be led by banks, we think, as of now, as margin expansion and asset quality improve. Then technology firms, which have supported by increasing demand, and the consumer-related sectors benefiting from GST reductions, lower inflation, and interest rates. So consensus EPS growth forecast for 26 would be around 16%. So what we see is, as of now, we are at the juncture where the portfolio building is must as of now. Allocation to stocks with proper discipline, with proper franchises where you see the growth would be coming. So this is the right time to build a portfolio. So for this, we have started PL Falcon Advisory at the HO desk. So I will just quickly, if you can see the screen, we'll share what exactly we do at PL Falcon Advisory. So the portfolio is designed with a balanced approach to invest. We have divided the portfolio in two parts. One part is called the core portfolio, where the 70% of the amount would be in long-term ideas, targeting strong compounding over the time. And the satellite portfolio, which is 30%, will be in medium to small term kind of opportunities where we will aim to capture tactical gains, and it will be totally based on the market cycles or the trends as of now. We will deliver end-to-end research and execution support to all of you. The 70% core portfolio will come from the institution research desk. So we have only one research desk across. We have 35 analysts, all are CA MBAs. It's been headed by Mr. Amnish Agarwal. They cover almost roughly around 250 to 300 companies. From that, they have hard coverage on 190 companies. From that 190 companies, they come across 20 high conviction ideas. We filter from that 20 high conviction ideas and try to get in at the best opportunity and the best rate that 10 companies into the core portfolio. So this is basically the structure. So whatever the thought to tell you was the whatever companies we find or whatever franchises we add in this portfolio, it would be from the top research ideas, wherein a team of 35 members have given their time rigorously from quarter on quarter. They are deep financial expertise on that. So that's why the portfolio will be designed as such and it will be diversified as such that there will be an allocation of 7% to each stock, to each franchisee. Point number one. If there is any major change in the structure of the sector or the company announced on quarter results, it will be quickly moved out from the Falcon portfolio, from the core portfolio, basically. So that is the thought process we have been running through. So what exactly The style of this portfolio is, first, we are looking for the growth investing. Like I said, taking the 10 high conviction ideas, the companies with strong fundamentals, promising growth outlooks, where the current market price do not reflect their future potential. So that will be there into the core portfolio. Then there will be a satellite portfolio to earn extra alpha into the portfolios. This satellite portfolio will be churned in 45 days. So there will be a bracket of 45 days for this satellite portfolio. In this, there will be 4 stocks, 4 to 5 stocks. So total 15 stocks will be there into the portfolio. So 4 to 5 stocks will be 14 to 15 stocks. So the four stocks will be into the satellite portfolio. In this satellite portfolio, the approach would be very simple. We will select the value companies only, but with the trend analysis, we will focus on the price momentum, and it would be supported by sector-wide breakouts, which will be allowed to enter to take the position, also to exit also at the right time. Even if there will be a down moment, if suppose the company is not performing and we reach somewhere around downside to each stock, somewhere around 10 to 12%, we will review it and we'll move out as quickly as possible. On the upside, we will try to trail it up to 30-35%. But on the higher side, if the company is moved fast and given return of 30 to 35% in 40 to 45 days, we'll move out also from that. There are many examples to that which we have done in the past. And of course, the major point over here is, while doing this, both core and satellite portfolio, we'll try to focus on the capital protection. And we believe that protecting the capital is equally vital as growing it. That's why we will prioritize minimizing potential losses over maximizing potential gains. This is some of the past performance wherein, like I said, in 45 days, if we get somewhere around good percentage, we'll try to churn it as early as possible. So if you can see the franchisees names first on the left hand side, I'm just moving the cursor over there. So the stock names are KEI, ICICI Bank, Force Motors, BEL, NAM India, Paytm, MobiKwik, Ola we did one round, Hitachi we did one round, Linde India we did one round. So in the portfolio, this is one of the example that this is ICICI was part of the core portfolio, but it moved so fast and we picked up at the right time. So we entered and we exit in a year kind of, wherein KEI, which was into the cable space, in 2 months we have got 41%, which was part of the satellite portfolio. The same way, Post Motors was part of the satellite portfolio. BEL was part of the core portfolio. So some examples are here. This portfolio is like very well diversified. In some parts where you can see the KEI was the short-term structural theme, while ICICI Bank was long-term structural theme. So we focus on resilient business and the consistency of the companies, and we always believe on the compounders. All were compounders at their age, at their time. So we always focus on the trustworthy compounders and then take into our PL Falcon portfolio. So some of the companies as of now which are there in the portfolio are like, some of the top-notch companies are State Bank of India, Hindustan Aeronautics, SRM Contractors Limited, JSW Energy, Tata Steel. So I will just quickly share one of the examples, like some of the companies which are not mentioned over here and which are part of the portfolio. So I will just quickly share few examples wherein why we like that stock and why we still feel that there is a bigger scope. So to start with SBI, they have given very strong result. They have raised guidance and they are keeping the rally alive. So there was a 7 bips net interest margin improvement versus the expected decline. The management raised FY26 guidance to 12 to 14% loan growth and was about 3% NIMs. So asset quality of SBI Bank look very strong with the credit cost at 0.5% and the slippages below 50 bips. Also, management has hinted on the value unlocking, which is expected via SBI AMC and SBI General Insurance IPO. So this was one of the stock in the portfolio from from almost like 6 to 7 months back. We are holding it from 820 levels. Roughly, we are at 950, 960 levels as of now. Also, the latest addition to the portfolio was Adani Ports. Being Adani name, still we feel that Adani Ports can deliver very good upside from here on, which in they have said that they have target capacity expansion from 633 MMT to 1 to 1.2 BMT within 5 years, which is positioning very for the long-term scale benefits. The international port margins are expected to rise from 26% to about 45% as Tanzania, NQST, Colombo operations mature from here on. This current quarter result, they saw very strong consolidated performance with 12% cargo growth, 28% market share, and stellar marine logistics EBITDA growth, which is up 1.4x to 3.x year on year. So the outlook for Adani Ports for FY25 to 28 revenue EBITDA PAT CAGR of 17%, 15%, and 20% respectively. The leverage remains very comfortable at 1.8x, and we have maintained buy with a target price of 1,777. The current stock market price is somewhere around 1,444. So such ideas for the core portfolio we have taken in. For the short-term trading ideas, we have focused on one of the stock, which is as of now not in favor, but still we believe that it can be a very good multi-bagger from here on. One such stock is delivery. I will just quickly take 1 or 2 minutes on delivery so that why I'm repeating this, why there is not only like we are having the research reports, but there is a very high conviction bet for us, all which are being showcased on the screen as of now. They all show some of the modes wherein the money can be made very easily, but it needs allocation, proper allocation and timing, which will be done by PL Falcon portfolios. So we'll quickly share what exactly delivery is. So all large economics, be it US or China, where e-commerce penetration has been significant, have one and only one leader in express parcels. In the US, Old Dominion has compounded at 25% for 40 years. They started with less than load truck shipping and then ventured into express parcels. And in China, there is ZTO, which grew at 35 to 40% for a decade when e-commerce penetration was rising. So both of these companies, they do 28 to 30% EBITDA margin, while all competitors or even number two players don't go beyond 12 to 15% EBITDA. That's because there is inherently massive scope for operating leverage in express parcels with size and scale. As you grow bigger and your truck utilization ramps up because of better routing and highly density dropping, one truck supplying to all places in an area, and there is a lot of volume from that area. The operating leverage is massive. A truck running at 50-60% utilization and a truck running at 80% utilization is the difference between 3-4% EBITDA and say 25% EBITDA. So the number of empty miles a truck runs can be optimized much better. This is a plain cost and reduces massively with scale. So only delivery has the scale and tech footprint in India to be the leader. They are already the lowest cost player in the country and have driven competitors to bankruptcy. Ecom Express got acquired by Delivery this year. Express Bees is about to get shut down or acquired again. So this lower cost delivery mode is unaccessible in, in my opinion. So once cost driven by P or VC, money to scale is driven out, which is mostly done, then delivery can flex the pricing power muscle, which they have started at the fag end of this quarter. They have hiked prices to Flipkart by 10% and actually wanted to increase by 20%, but instead got assured peak volume offtake by Flipkart till March. So both Flipkart and Meesho tried to in-source logistics, but their cost of delivery per parcel is 15-25% higher than the delivery at present, and they will never have the scale to be cheaper. So this stock delivery has a long tail of extremely profitable D2C and standalone clients for whom there is no alternative but only delivery. So this is where we see in FY27 itself, I expect delivery to get to 8,000 crore of express parcels revenue. They are already at 6,400 crore run rate as of Q2, and e-commerce in India continues to grow at 15 to 20%, with some market share gains also expectedly organically. So somewhere around, even if they do 1,200 crore of pre as EBITDA, 15 crore actual EBITDA, so company should be worth 60 to 65,000 crore comfortably, which is 100% upside from year in the next 1 to 2 years. Even if we, even if this gets pushed, it will get pushed by 6 months max, but that's what we are playing for, 80 to 100% upside over in next 1 to 2 years in delivery. So we have all the rationals been placed. We see where exactly the money is flowing. So for such things, we have been kept into the PL Falcon portfolio. So what exactly been taken care? What will be the process for this PL Falcon portfolio? So we will manage the entire investment cycle of yours, like selections of the stock, entry of the stock, exit of the stock, rebalancing of the portfolio. Everything would be taken care. End-to-end management would be there. For the transparency, we will do periodic performance reports. We will send the trade updates to you. To ensure transparency and compliance, each trade will be executed only after your approval through one of the following channels, either through the phone call, which is direct confirmation from your registered mobile number. Then it can be a WhatsApp message from the registered WhatsApp number. Then there can be an email from your registered email ID or the OTP thing which we have recently started. So to tell you once again about the portfolio, like I said, the 70% of the portfolio will be addressed on the first day. Whenever you give us the fund, the 70% will be parked immediately. And for the 30%, in that 30% also, one or two stocks will be added on the first day only. Rest, for that, you will have to give confirmation for the trade confirmation. And once this has been confirmed by this channel, or head office at Bombay will execute the trade directly in your account and will ensure the process is done very seamless. The execution will be done seamlessly, and there will be full control on the portfolios. To talk on the returns as of now, like I said, we take 10 high conviction ideas, which is roughly from the Nifty 50 to Nifty 100 kind of, but there are some ideas which been taken care from the BSC 500. So that's why we have kept benchmark as BSC 500 as of now. So if you see the 1 year return, which is roughly 13.5%, wherein BSC 500, which is roughly given 5% return. And in 2 years, wherein the CAGR was 14.89% of BSC 500, we have given 18.49%. So on the higher side of above keeping the portfolio for 1 year to 1+ year, we have beat the BSC 500 benchmark with almost 10 to 15% CAGR regularly. So there is no annual maintenance charge, there is no profit sharing charge, there is no advisory fees for this. It's plain vanilla. It will be done into your demat account and the trade will be executed from the HO head office. So this was all about Falcon, and we can start any Q&A sessions on the Falcon or on the markets or on any stocks which you want to ask for. You can just write on the chat box.
Thank you, Vikram, for such a informative presentation. Uh, so if you have any question, put it on the chat box. So we have one question over here. Uh, Quick question, either to you or your compliance team. I am a NRI. Can I participate in your Falcon program? Is this program open to existing PL customer only or new customer only? Does it matter if I am an existing customer?
So yes, it's open to all basically, and you can open a demat account. Pankaj will guide you to open an NRI account with us, and yeah, we can execute the trade in your account, sir. So that can be done
Right. Right. So it's open for all existing account clients. So we don't need to open a separate account for Falcon. And is there any fee structure for this investment?
No, there's no fee structure for this. It's plain vanilla. The broking charges which will be there in your demat account. Apart from that, we are not taking any annual maintenance charge or any advisory fees or any performance fees also. We are not giving any entry load or exit load kind of. So there won't be anything. If you want to sell your shares, if you want to sell this, you can sell tomorrow and get the funds remitted to your bank account. So there is no capping anywhere, no charges.
Okay. One more question. I have a NRO account. Can I open a demat account for NRO and participate? Yes, yes, we can do that. One question, please explain why Ola Electric is chosen when it is bleeding money and reputation is very bad. The regular players like Bajaj and TVS are doing very well.
Yeah. So we did one round in Ola. Like I said, I will just quickly uh, which I've already shared. Like we did one round into the satellite portfolio. We bought somewhere around 48 levels and we sold at for 63 levels. But I would explain why exactly we feel like Ola can be a big trigger. So they are coming into the BESS, which is battery energy storage system. Of course, what you are saying is the players like Bajaj and TVS, they are doing very well. And we have been watching the Vahan data back to back. Few months back in the Vahan data, Ola was ranking somewhere around second position or the third position. But right now, this has been shifted to the fifth position. The Bhavesh Agrawal, which continuously back to back said on the TV and on the recorded line that he was targeting somewhere around 25K monthly numbers of the vehicles. So we somewhere feel the above 16K or somewhere around above anything above 16K vehicles, it will be EBITDA positive, point number one. And but the larger theme of the this like cycle is more on the battery storage system, which we feel that could be a bigger story going forward, and it's one of the leading sector. So we will have to wait for his best business to unfold, and also best is an eventuality, and on the current pricing they make 10% margins on that, and the major trigger will be the PLI for batteries, which could and we should recoup the entire capex of Ola. So yes, as of now, the name is shady and it's bleeding money for sure. Reputation is also bad, but it is part of the satellite portfolio, not the core portfolio. The stop loss are in placed to play that thing, and yeah, if things work out, you would be surprised that Ola can be not only a five bagger, it can be a 10 bagger from here. And we are just waiting for the best business to unfold, which is battery energy storage system. And Ola would be only player who would be making this battery in India. So
Uh,
that's the
yeah.
Rajiv ji
Then
on Ola Electric.
then how will it compare to Amaraja?
So I feel like if you are going only for this best thing, not the Amar Raja, they made the batteries, but the battery energy storage system, it would be with Ola only. So Ola is totally for best thing as of now, not for the batteries kind of. So it's not possible to compare with Amar Raja, but yes, like Amar Raja is also good on their own part, on their own business, but Ola is not comparable to them.
Would it be possible to share the presentation?
Yeah, 100%. We can share the presentation.
Right. So we have all the email address. We will send it across to you. As you inform that all the money is flowing to AI, then will US tech stock will do good in near future?
You, what
As
exactly?
you yeah, as you inform that all AI stocks, all money is flowing to AI, then will US tech stock will do good in near future?
Unfortunately, my thought process is that we will see some correction into the US markets from here on. We have underperformed a lot in not only in front of US but in the Asian peers also. My only worry is when the earning cycle is improving in India, if anything burst out in US, we will have to face that music also. So that is the only thing, where we can see the rally, not to be the broad-based rally and only the stock pickers rally as of now. So that is one thing. And my thought process is not to be, it's not good to be there into the US tech stocks as of now. Rather than India is very, very good opportunity, and it's the best diversification one can have over the AI as of now.
Okay. Also, can MobiQuick compete well with PhonePe and Paytm?
Yeah.
Margins are very low and it is not making profit.
So, I always say that in this new age stocks, you have to focus on the management's style also. If you have noticed, Rajiv ji, that Vijay Shankar of Paytm, at one time he was like on the cloud nine. He was always arrogant and always on the like on the street that no one can beat him. Post he getting like downward towards towards the tone and everything. The Paytm started its rally from 400 and it was non-stop to 1400, and I feel Paytm can go to 2000 also from here on. But what exactly the stock pickers theme or stock pickers nature is like, to get the stock at the bottom. So like MobiQuick also had a run almost to 8,800 to 1000 levels, and it is back to 230 to 250 levels kind of. And the results, uh, just now the results were announced, and they got a very, very decent set they have given, and the 12 crores fraud hit was also covered, and 6 crore EBITDA loss versus the 31 crores in Q1. There was cost rationalization and across employee and payment side. The H2, they mentioned that they will recoup H1 losses, so they can do very well, 45 crores EBITDA in H2. If this spelled out on the call, should be like really good from here on. And 96 crore was the core quarterly EBITDA in payments and lending. They have guided for profitability in Q3, and also had hinted towards PAT profitability as well. And lending business, the margin expanded from 13% to 41%. So such are the things which they have given into the call. And internals are really good. If you see Rajivji, the MobiKwik internals, they are very good. They have almost hinted at the numbers which we were working on. They on the company, the 50% plus growth in payments and 20% quarter on quarter growth in lending. Lending, they believe they can be 2 to 2.5x in next 4 to 5 quarters. So there is one Zack Pay, then there is wealth management, then there is plus broking and the forex business. This all will be like contributing in the next 2 quarters. So there are many triggers on MobiKwik side, and I feel roughly the price is somewhere around 245 as of now. I'm talking about a stop loss of hardly 15%, but an upside to 2x. So the risk reward is also in the favorable to have into the satellite portfolio in PL Falcon portfolios. So that was the thought process on keeping MobiKwik in the portfolios.
I see that 5 lakh is the minimum investment. What would be the decent level of investment? So I would say like ideally 10 lakhs would be good to start in this Falcon portfolio, but you can always start with 5.
And
Okay.
I would request everyone that this is the right juncture to check the portfolio health by doing the portfolio analysis, which we can do for you. What is our USP at Prabhudas Leather PL Capital? Like we have done two sort of things. We give a one pager on your portfolio health checkup. First is what exactly, suppose whatever stocks are there in your portfolio, on each stock, what is the Prabhudas Leeladar's view on the stock? Point number one, and the consensus view on that stock. So you will get two views wherein what exactly PL wants to say on that stock. Also the consensus, whoever analyst is covering in the universe, that consensus would be given to you. On every end of the quarterly result season, this is really important to do the exercise so that your allocation, your stock selection in your portfolio should be towards the like market centric, which are the sectors are growing from here on and which are the sectors are not growing from here on. That's the one thing. The second thing is there will be many stocks in the portfolio which we get married to, which we don't sell even if the losses are there, and the allocation comes to below 2% of your portfolio. There are many stocks which comes to below 2%. So the time is to sell that 2% because that 2% of your portfolio will never give you higher returns. Like even if that company grows to double, the allocation would be so minimal that to keep that stock also it will be a criminal. So the thought process is you just hand over your DP or the portfolio details. We will give you one pager. We will showcase you what exactly which stock to keep in, which stock not to keep in. And apart from that, if there is any such stocks which you are married to, we will redeem that and shift it to Falcon to start with so that you are inclined with both the ways. You are doing the portfolio health checkup plus you are doing smartly investment with a proper strategy and with proper disciplined approach. And this also is free from us. So you should surely tap in for portfolio analysis report.
Mhm. Uh, Vikram, couple of questions from my side now.
Yeah.
Okay, so when you think FI will be back?
So my rough thought process is like the selling has been toned down a lot. So there are two, three triggers from where they should come in. First, there should be a big drop into the AI stocks globally. That should be the first thing, first trigger to know. We will get some selling on that day also, but that will be the first trigger to know that the money could be flowing to emerging markets and money could be coming to Indian markets. Point number one. Second thought process is the earnings are just starting up. The only headwind as of now is the tariff deal. So as I said, the many companies have started saying that we have stopped buying oil from Russia. So my thought process is the US trade deal is very near. I'm saying near means I'm saying in next 10 to 20 days it should be announced that we have done with the deal. So my thought process is from start of 2026, FIs would come with a bang over here. They are already about 75% short into FNOs also. Like in the derivative side also, the FI's long short position, they are almost on the higher side shorts above 75% from last 3 to 4 series. So that unwinding should be coming on that part also. So roughly, if you talk about the Nifty levels, so I feel 25,200 to 25 like 300. This should be like good support. And on the upside, if we move anywhere somewhere around 26,000 plus and 26,200 plus, we will see a 1,000 point rally very fast, and it would be so fast that you like there it won't give any chance. So that this is the right time to take care of the portfolios as of now, Pankaj.
Okay. And which are the top sectors we should look at?
So as of now, like I said, like we should be at this juncture, which should be we should be very stock specific as of now. So more into the banks, autos, and some of like I said, Adani Ports or Indigo or such kind of a stocks as of now. And after that, we can surely go into the broad based and have a like stock from each sector. But as of now, my thought process is to be into the best of the best franchisees, and the core portfolio should be of the large caps also, large cap only as of now, because the funds also they are not taking the risk as of now because everyone is clueless about the trade deal and all. So that's the focus as of now.
Okay. One question can from the participant: can we have sectoral analysis from Falcon Investment? And if AI burst happens in Nasdaq, will FII flow into emerging market like India? Will AI stocks gradually correct to its proper valuation? No IT stock is picked for Falcon when the stocks are at very good valuation.
Of course, the IT stocks are like at a very good valuation as of now, and we have not seen such levels from such a long time in Infosys and TCS as of now. We are evaluating and we are waiting for some spark over there in on the technical side. Fundamentally, of course, the valuations are really good, but we are waiting for the some technical spark or some momentum price momentum spark over there.
Maybe like what is the PE of Falcon portfolio?
So we don't do as an any PE calculations as of now, and we focus as an absolute terms only, not for that. And
Okay.
of course, the AI burst will happen soon in Nasdaq for sure, and that would be the one of the reason like I said, the FI's money would come back and rolling in India. Not only in India, it will go back to Chinese equities also, but majorly into Indians as of now.
Perfect. So, Vikram, I think we have covered all the questions. There is no more question. So, thank you very much for your presentation and answering all the questions. And participants will be having such session quite regularly. We'll be calling product head and fund manager for this kind of session. Thank you very much. Thank
Thank
you,
you so
everyone.
much, Pankaj, and thank you everyone. And I just like want to have many portfolios so that we can review it, restructure it, and give you like our best of the best thoughts on your portfolio. Thank you so much.
Thank you. Thank you, everyone. Thank you.